Hey, this is Tish Griffin back with you guys again with Family Credit Management, and I am here to share with you just some knowledge and tips on dealing with your debt, dealing with finances, any questions that you may have regarding your finances, debt, dealing with collection agencies, bills that are out of control. Feel free to reach out to Family Credit at 800-994-3328 or go online to familycredit.org. Now, I want you to use Family Credit as a trusted resource. And the reason why I say that is because a lot of times we have issues, we have problems, and we don't know who to talk to or where to go. But with Family Credit, you can talk with a counselor about your situation directly, and they can give you advice, helpful tips, help you deal with debt, and help you make a plan to get out of whatever situation you may be in. So use them as a resource. You can also go online and request my spending plan, which will help you get started with budgeting, or personal finance made easy, which is another great guide that you can download, or you can ask them to mail you your own copy. That's right. You can have your own physical copy too. So I want you to use them as a resource. Make sure you grab this information because these tools are free. That's right. They're free. You don't have to pay anything to get them, and they send them to you. What better options are out there than something that's free that will help you get your finances together and keep you on track? So today our show, we're going to talk a little bit about something that has plagued some of my clients that I've been counseling lately. So I wanted to talk to you guys about it as well. And it has to do with the housing industry here in Chicago and throughout the suburbs and just in Illinois in general. What we're finding, especially in Chicago right now, is that the property tax bills have come out and they have hit people more than ever thought possible. I mean, I've seen people whose taxes have increased thousands and thousands of dollars. Now, that's something that's unexpected, first of all. And now you have to look at your budget and see whether you can afford it or what can you do to work around it. Now, as things get better throughout the Chicagoland area, keep in mind that as the neighborhoods get better, as things change, as we beautify our neighborhoods, which that is exactly what we need to be doing in and around Chicagoland and the suburbs, making sure we take care of where we live. Well, that means our property values are going to go up. And when your property values go up, what is considered your assessed value increases as well. And so now your property taxes as a result of that are increasing. Now keep in mind, as other monuments are going up, as downtown begins to get better, as other attractions are coming into Chicago and into the suburbs, that means that now our houses are worth more. And that's a great thing because it builds equity for us. It builds equity for our community. And there are some places people have seen where they may have bought their house for $100,000 and now they're worth $300,000 or more. What that means, though, is that if you bought your home and you have a mortgage for $100,000 and your property value is worth $300,000, you can actually take that difference between the 3 and the 1, which is $200,000, and you can pull that out and get a check for that from the bank, which is called pulling out your equity or refinancing and cashing out that equity so that you get that money. But keep in mind, when you do that, now that means you need to make an additional payment to the bank for that. That money that you are pulling out, yes, you can pull it out. Yes, it's yours, but it becomes another loan. And so that's what a lot of people are faced with now. That yes, the property values are up, but guess what? I can't get that money out. Or if I get it out, what does that mean? So if you're pulling out money, that means that you are adding on an additional payment to your budget each month for maybe hundreds and hundreds of dollars, depending on how much you take. Now, most banks will let you take about $50,000 of that equity out. And sometimes you can take even more than that. But to start, that just means that now you've got $1,000. You have to think about what that payment is going to be. And it could be hundreds and hundreds of dollars now added into your already stressed budget. So you want to think about that. The payment that I have now, if I pull this equity out, now what does that mean? That means you've got less cash to work with. But what a lot of people are finding is that now that their property values have increased, now the property taxes have increased. I was counseling a young lady last week where her property tax bill was roughly about $3,000 or so each and every single year. She got her new bill, and now her bill says that it's $5,000. Is there a way around that? When your property taxes go up, you do need to pay them. The counties that you live in actually have the right. They're supposed to get their taxes paid each and every single year. And so if you're not able to make that, we want to see what are your options. So we have to find some way to make that. Most homes, if you are living in a certain area or county, you have what's called a homeowner's exemption. And what that means is part of that assessed value, because you live in the house, they can take a portion of those property taxes off based on your assessed value. And that way you'll get an additional discount on your taxes. So maybe if your property tax bill is $5,000, let's say now your bill is $5,000 annually. Let's say now you're going down to $4,500. It helps. Everything you can do helps. So the way for you to get that homeowner's exemption is to go to your property tax assessor's office and say, hey, just want to check this out. Make sure that I can apply for my homeowner's exemption, meaning I live in my home. So therefore, I can get that additional discount. Now, if you are a landlord, you can't get that homeowner's exemption because it is only for those, again, that live in the property. If you're a landlord, corporation, don't really have those types of perks and benefits because you're not living there. So as long as you live in the property, you can get a homeowner's exemption. For senior citizens, once you live in your home and you become a senior citizen, you've lived there for years, you can get an additional exemption called a senior exemption, which may work in your favor by reducing your taxes, your property taxes even more. So if you got an increased bill and you're a senior citizen now, call the county assessor's office, the Cook County assessor, or whatever township you may be in. If it's Will, DuPage, Kane, wherever you're living, Lake County, find the property tax assessor and say, hey, I'm a senior citizen. Let me get that extra discount. Seniors get a lot of different discounts. It's not just to the movies. You can get a property tax exemption on your taxes. Now, it goes one step further. For some seniors, if you are eligible, you can get what's called a senior freeze. Now, with the senior freeze on your property taxes, that means that, guess what? You're paying a lot less on property taxes now because you live in the property, you're the homeowner, you're a senior, but you may get an extra benefit, especially which could freeze your level so that your property taxes don't increase anymore in the future. And sometimes they can take an additional discount off of that. Those are worth it. Also, if you are a veteran, if you have served in the United States Army, the armed services, whatever service member you may be, it is possible for you to get an additional exemption as well off of your property taxes because you are a veteran. So there's ways around this, things that you can do to fight and make sure that you keep your payment as low as possible so that it's manageable for you. If you're a veteran, please take advantage of the property tax exemption that you may qualify for as well. And if you are a disabled veteran, it's possible that they will discount your property taxes so that you're paying little of nothing. Some veterans don't even pay property taxes. But keep in mind, you've got to apply. These are exemptions that are there to help you to keep those payments manageable so that you can remain living in your home. Now, if you were to move out of your home, keep in mind, let's say you wanted to rent this home out. Now you're not living there anymore. So that means that you're no longer eligible for that exemption. You want to remain living in that home so that you can get that benefit and enjoy the benefit of having the lower taxes, or in some cases, those taxes are exempt. Reach out to your county assessor's office to figure out if you are eligible for that. We want to keep those payments as low as possible. Let's see. If you have a homeowner's exemption, or you say, well, those options just don't work for me and I'm dealing with the higher property taxes and I don't know what to do, you can reach out to your county assessor's office as well and see if they can have someone come by and actually do a review of your property to see if the assessed value is wrong. Keep in mind, though, if you do that, there is a chance that they can say, well, actually, the value is higher than we thought, so you might get a further increase. Or they can say, we agree with you. I see that the property value isn't what we once thought it was, so they will reduce it as well. But you don't know until you ask. So make sure you get those exemptions. If you feel that your assessed value is incorrect, you feel like it should be lower, you can reach out and have them come by and do a review. Again, taxes may go up. So you want to make sure that if you're going to actually do that, you got some leg to stand on. The next thing that you want to do is, if you are thinking about this and that payment is just too high now with the property tax increase, you can reach out to your lender and see if there's a way for you to do a refinance, meaning that you will take out a new loan that replaces the one that you have. But the goal of this refinance is to actually reduce your payment. And you may say, well, my rates are pretty good. If you do a refinance, you do take on the new interest rate or whatever those terms are based on that loan. So you want to make sure that you know what you're getting yourselves into. As the purpose is to make sure you can afford the monthly payment, though. So if the payment is going to end up being less, but your interest rate is increased, it's like you have to weigh and see whether it works for your situation on your own. But it's an option for you. Now, typically, a lender will only do a refinance if it works in your benefit. If they say, yes, we looked at your situation and yeah, we can reduce your payment, then that's when the refinance is right for you. Or they may say, we looked at your situation and you can pull out that equity that we talked about. Then you may want to consider that too, if that's something that's right for you. But again, it's all in that payment, making sure that it's affordable and you are able to make that payment. The next thing that you may want to do is consider a modification. Now, some lenders, well, all lenders have a loan modification process or a department that deals with restructuring your loans if something were to happen. In the event you are facing a hardship. With this, there's a loss mitigation department or a foreclosure prevention department that your servicer has to have. Sometimes they can look at your loan, restructure it, and give you a smaller payment, or they may allow you, there may be some other things that they can do as well, but you don't know until you reach out. So if you feel like you're suffering and that payment is too high now that your property taxes went up, reach out to your lender, see if there's something that they can do to help. I promise you, it will definitely go a long ways in getting that payment more manageable. Because the last thing you want to do is go from, let's say, a $1,500 to a $1,700 or $1,800 monthly payment, and you didn't expect it. It's out the blue, so it really is affecting your budget, and it's hitting you hard. I know it hits your families pretty hard. The other option that you have is to think about what your mortgage payment is made up of, and see if there's a way to reduce any of those other things. So when you pay your mortgage, that mortgage payment typically includes your principal and interest, your property taxes, which is what we're talking about. Some mortgages may have a private mortgage insurance or PMI included, and then your homeowner's insurance. A lot of times we don't realize that our homeowner's insurance may start at a high rate and we're paying it, let's say 12 years down the line, we've been paying this each and every single month. Sometimes we can go to our insurance company and see if they can reduce that payment each month as well, which will reduce your overall mortgage payment. So we've got the principal and interest, we've got our property taxes, which is what we're trying to, fight against, and the PMI or your homeowner's insurance. So private mortgage insurance and homeowner's insurance are two separate things. So if you had a loan where you did get private mortgage insurance, which private mortgage insurance really is just something additional that you have to have if you did not put down 20% when you bought the house. So if you put down 20%, you're not really worried about PMI. But if you did not, then yes, you've got this additional portion that you have to pay each and every single month. And the goal is for you to pay that until you build equity in the house, or until 10 years, whichever comes first. So if you've had the house for 10 years and your property taxes have gone up, you can contact your servicer and they can remove that PMI if they haven't done it already, which will lower your actual mortgage payment. Or you can refinance to see if there's a way for that private mortgage insurance to come off as well. So these are ways that we're looking at reducing that monthly payment. I know it's hard out there, and the property taxes increasing really took a toll on some people, and it's hit some families hard. We want to make sure that we can maintain our neighborhoods, that we can maintain our homes and keep things moving so that, you don't have to worry about now I have to find some place to go. Recommended, again, that you look at talking to your servicer, your lender, talking to the tax assessor's office. Look at different ways for cutting down that monthly payment by contacting your insurance company, or get some other insurance quotes out there. A lot of this, though, is based on what your actual credit looks like. So even though we talk about credit a lot, and yes, now you find it here playing into your property taxes. And you may say, well, what does my credit have to do with my property taxes? Some of those options that we talked about, even getting new insurance quotes, well, insurance companies, they typically give the better rates, the lower monthly payments, the lower rates to those with the higher credit score. So we want to make sure that we keep our scores healthy for those types of situations as well. Because again, it's a benefit where we can reduce that payment, or you may go to another insurance company and say, this is what I'm paying now. Can you do better? That's something that's going to save you. And for those of us that are looking to say, well, I'm just going to refinance. The best way for you to refinance, honestly, the only way for you to refinance is if your credit is in good standing. So you want to make sure that you're keeping that score high. If you're looking to refinance, you want to sit down, pull your score, know what's on your score, know where you're at. Because the last thing you want to do is call the bank, call the servicer and say, hey, I want to refinance. And they tell you, you can't really, even though we know you have equity in your home, even though we know you guys have been there for years, we know the property value is doubled. We know that your mortgage, hey, you started off at $100,000 mortgage and now you're down to $50,000 and you've got about $250,000 worth of equity that you can actually pull out. Or yes, we can reduce your mortgage payment, but we cannot refinance you because your score is not high enough. That's what we do not want to see. So that's, again, why we want to sit down, look at that score, and let's get everything together. When you're thinking about, can you afford a mortgage, or you want to refinance, your credit score is important, as well as your debt to income ratio. If you've got too much debt, that's the next thing that we want to tackle, because sometimes the property taxes, they just are what they are. So you have to make your budget work. So now we want to look at what debts do we have that we can quickly eliminate, that we can reduce those payments on, so that we're okay with the property tax increase. We may not like it. Of course, we may not think that is right. But at the end of the day, there's really not a lot that we can do but to adjust our budgets, adjust our finances, make that payment. So how are we going to do that? We've got to reduce and cut some things out on the other side. So if you're dealing with lots of credit card debts and lots of store debts, and my new thing that I'm seeing is the buy now, pay later. And you may say, well, what, buy now, pay later? What's that? Everybody's heard of the Klarnas, the Affirms that are out there. There's a lot of different options where Afterpay, you can even take vacations now and split up those payments. It's not just credit card debt. These buy now, pay later deals, they come with finance charges. They come with extra charges, increased rates. So we want to make sure that we can get rid of those too, because we want to keep ourselves together. We want to always have a home. We don't want to lose our home. We don't want to see it go into foreclosure, and we don't want to lose our communities. That's the key thing here. We want to make sure that where we're staying, yes, we want to see the property values go up, but we need to be able to comfortably afford whatever that's going to look like for us on the other end. So again, thinking about the equity, yes, I know you may have a lot of equity stored up in your home. You want to hold on to those homes. And for some people that have lived in their homes for years, senior citizens, especially if you are a senior and you've been in your home for years, some seniors will look at doing what's called a reverse mortgage. And with the reverse mortgage, typically what happens is instead of you making your mortgage payment each and every single year, every single month, and you may have your house paid off, so you've got a bunch of equity, what's going to happen is they will allow you to pull that equity out. And every single month, instead of you making a mortgage payment, the bank makes that payment to you. Now, for some people, it's a good deal, but for others, you have to realize what's going to happen on the other end of that too. With the reverse mortgage, it's a great way for you to get extra income each month if you are a senior and you qualify for it. But keep in mind, once you pass, once you are no longer here, and now you may have family remaining that said, oh, this is what's going to happen. We know we're going to get that home. We're going to keep that in the family. Well, what happens with the reverse mortgage is once the person who owns the mortgage, once they pass and they've been getting payments, that home now belongs to the bank. It goes to the bank. It's not the family's home. And what I'm seeing a lot of days, though, is some families get into that situation where they didn't know that their parents had a reverse mortgage. They didn't know what was going on. And now, because they have that reverse mortgage, the family will not be able to keep that home. Now, let's say you've got a reverse mortgage and they've been sending you payments of $500 for the longest. Every single month you get a check from the bank for $500, or they put $500 in your bank account now, and you're using that to live off of, and everything's going great. Once you pass, that home goes to the bank. The bank will give your family a number of days to say, if you pay us back all the money that we gave mom, then you guys can have that home back. We don't want it then. All you have to do is pay us back all the money we gave your mom. And so a lot of families struggle to find a loan because no one was prepared. No one knew that this was a possibility. No one knew that this was happening. But mom was able to stay in the home. She got the extra money. So now the bank wants their money, and then you can have the home. I'm telling you this so that you are more aware as you go throughout life and you're thinking about these things. Or should I get a reverse mortgage instead of me, paying the property taxes? Now I'll get that money and the bank is taking care of the payments. Is that something that you want? Make sure you discuss it with your family first so that they know what's happening. And they may say, hey, we don't want the home. Once you pass, it's been decided that no one's going to be able to keep up with it, and we don't know what's going to happen. But make sure that everyone is aware. Again, we talked before about just being legally prepared in the event that the inevitable happens. This is all a part of that. Please feel free to reach out to a counselor at 800-994-3328 if you have questions, if you want to discuss other options, if you want to look at your budget, because that's the only other way that we can think of. You've got to be proactive when things like this happen. And you may say, well, the property taxes went up a little bit this year and I'm okay. But guess what? As things get better, you will get better. As things get better, just keep in mind the property value is going to get better. You're going to have more equity out there. But your property taxes are going to increase some more. Yes, in the future, every year, your property taxes may increase. And then again, sometimes they may go down. But you want to be prepared in the event that they do increase. And some people, they knew that the property taxes were going to increase, but some people had no idea that it would be so much. So keep that in mind as you go throughout your budget. We've talked about a few different ways for you to make sure that you are okay if your property value were to increase, dealing with those property tax bills that just went out. And if you cannot afford it, if there's something out there that you can't afford the new property taxes, reach out to your lender. First, reach out to the tax assessor's office. See if you qualify for those exemptions that we talked about. Remember, there's a homeowner's exemption if you live in the home. There is the senior exemption, the senior freeze, the veteran exemption, and there may be some other exemptions in your local township that you may qualify for. But the only way to find out if this will help you is if you ask. So you want to look at that. You want to see about reducing your monthly mortgage payment, maybe a refinance is right for you. Rates are expected to go down and they've been decreasing a little bit. Don't get used to it, but you want to be comfortable. Make sure that you can afford that payment. And if a refinance will help you, do just that. Also look at your monthly mortgage payment, see if there's anything that you can reduce, such as the insurance, such as the PMI that might be on your mortgage, whatever it takes. And then last thing you want to do is adjust your own budget. Yes, your spending plan. And if you need help, sit down, look at your budget, reach out to Family Credit, 800-994-3328. Get a spending guide. Get started on your budget. And that's going to be the best ways for you to handle this property tax increase. Again, it just happened. Property tax bills went out. They were crazy, but it could happen again. So you may say, well, I don't need what she's talking about right now. But next year, this time, might be a little bit worse. Hopefully, we are all managing. We're able to manage the changes and we can flow because we've made those changes in our budget and in our lifestyle. We're making sure we're getting those exemption credits and those things are working. And if something were to happen where you say, I still can't afford any of this, now you want to look at renting a home or renting an apartment, we still need you to get your credit together. So that's the purpose of us here. Still exploring those credit options, making things better, because even though our credit, you may think your credit is trashed, but it does not take long for you to get things back in order at all. If you do the right work yourself and do the research, get some help, reach out to a counselor at 800-994-3328 or go online, familycredit.org. All right. Till next time, I hope this information was helpful and I will see you again soon. Take care.